Good afternoon. Good afternoon. This is Noble Woods. Today we are going to talk about backtesting. Backtesting is critically important. I don't think a lot of people actually understand what backtesting is, how important it is, how much time you need to spend on backtesting. So today I want to walk you through off the top, like a real pro. We're going to make up a strategy. We're going to define some rules, and we're going to backtest live. I want to do it live in front of you. Welcome to my channel. I've been doing this for since 2008 is when I really got serious about investing. 2009, I started learning about futures. I paper traded for about 8-9 months before ever putting $1 of real money in the market. Right? So there's a patience that comes with preparing for this career, this journey, this experience. You don't just jump into it. I know a lot of you guys did just jump into the market in COVID, right? 2020. I know. I've talked to a lot of you guys. Like I've talked to millions of people. Right? I have talked to a lot of you guys who are watching me or know me from Insider Trading, which is a group on Facebook me and my cousin Joel Harrison started like 10 years ago. It's one of the first groups on Facebook. Right, so I know, most people trading right now. It's a high percentage of you guys who just started trading during COVID, right? And you probably just jumped in not knowing, having a really solid checklist of how to enter your way into this profession, this field. It sounds good. You can trade, making money at home on your phone. People are posting all kind of receipts. I know, it pulls you in. Seems real glamorous, but there's work to do. There's serious work to do. So today, what I want to do again is we're going to talk about backtesting. And let me pull up my little notes real quick. So first of all, today is September 2nd. If you've been watching these videos, digesting, I know some of you guys literally, that one, my favorite, my recipe, my source, like the base for my Noble Woods method is the one. If you don't know what the one is, you need to go back and watch some of the other videos. I don't have time to explain it to you today. I've had people who have literally wrote me and said, Noble, this one is amazing. It's helped me to figure out why I've been losing so much. I've literally, I should pull it up. I've had that conversation with several people. The way that you're teaching, the way you're breaking down the statistics in a way that I can understand it. Now I get when people say high probability trades, what that means. All right. And we'll talk about that a little bit more too, because people will backtest a strategy, think it works a lot, not really test it enough, and then think it's ready now to put on the shelf to actually be utilized. No. There's some rules you need to know. There's some details. So I just want to kind of, again, I'll use Apple. I'll pull it up in just a second. And we'll kind of walk through it. All right. But first, September 16th, I'm super excited. My new live 4-week options class is starting. About 80-90 hours of content. We're going to meet Tuesday, Thursday. You'll get me live. Saturday live. 3 days a week live. Right? With somebody who has an MBA, who uses statistics, who approaches this as data analysis and quantitative analysis. That's what it is. Right? You need something that'll undergird your systems, your learning. Right? A lot of you guys you really have no idea how this actually works. Right? And I hate to say, but I think a lot of people kind of just, I don't know, man. COVID was great. It brought people into the market, which is awesome. But if you didn't start with really quality training, a lot of the stuff that you think you know doesn't even work, and you don't even know it because nobody will challenge you and tell you. Right? I'll tell you. I can't wait. 2025 is gonna be crazy. I got so many videos coming. So stick around, keep watching. All right, we got a lot to cover, even today. But if you're serious about options, you're ready to fully commit to this journey. Fully commit. You got to start with quality education, training, and coaching. My job is to be Phil Jackson. I'm trying to help make you Jordan or whoever your favorite player is. Phil Jackson was a coach, right? And Jordan would not have been able to achieve what he achieved without a coach. There's no great trader who didn't have somebody to help mentor him or her. It's impossible. You are not going to just figure this out. There's millions of people trying to just figure this out. You need some training, right? You need core fundamentals of what this is and how it works, All right, so that's September 16th. The link is on the page. Feel free to click on it. Go through the video. I give you my email address if you have some questions. If you do need to talk before you make that decision, because it is a life-changing decision, and I'm not cheap, right? Because what I do is life-changing, right? So that's September 16th. We'll get started. 4 weeks, 80, 90 hours, comprehensive, complete system, based on probability, based on statistics, actual statistics. I'm not just saying that. I actually using a statistical lens. And this method I've developed is really, really amazing. It really is. Okay, so today we're going to talk about backtesting. First, rules and criteria, and then we're going to calculate some percentages, right? And then we got to talk about the details, because this video is only going to be maybe 30 minutes, right? When I'm in backtest mode, I will backtest something. Oh my goodness. Actually, before we go there, let me do this. Let me find the actual, let me find a definition. I'm going to go to Investopedia real quick. I want to give y'all the definition of backtesting first. I don't even want to assume that you know. All right. I want to give you fundamentals. Backtesting, Investopedia. Okay. Now, notice what I'm doing. All right. This really is how Noble's brain works. The first thing I decided to do, almost instinct, without even thinking, it's not in my notes. I just really came up with this on the fly. I asked some of my best students and friends, yo, I want to go live a couple times on Monday. People will be at home. What do you think I should talk about? Give me some ideas. I got a ton of ideas, but those are videos that are coming. So I just wanted some stuff on the fly. I got so many good ideas. I was like, my God, y'all gave me too much stuff. Who gave me backtesting? I forget who gave me backtesting. Anyway, whoever gave it to me, thank you, because it's always a good topic. And so the first thing I did, back to fundamentals. What does the word even mean? What does it even mean? We got to get grounded in something first, right? This is how I think, how I approach. This is how you should think with everything related to trading. What does it even mean? Do you even know what backtesting means? If I ask 5 different people in a group what backtesting is, I guarantee the definitions would not all be the same, right? So I love Investopedia. It's where I spent literally the first 2 years of my journey, my career back in 2008, 2009. I was on Investopedia just getting the language, the words, right? Breaking down the words, trying to understand what this is. Every single thing that popped up, right? I was on Investopedia a lot, so I still love it as an old kind of resource, right? I'll give you the general definition. It says backtesting is the general method. Oh, method. Oh, now we're talking about methodology. What methodology do you use for backtesting or for trading? You can't tell me you just buy off some Fibonacci level and that's your strategy. That ain't a strategy. There's no method there. Why that indicator? Why that percentage? Why that level? Have you backtested it? How much have you backtested it? Have you backtested it on different time frames, on different types of stocks with different beta coefficients that move at different speeds? Have you tested that when the VIX is up above 20? Have you tested it when the VIX is real low under 16? Do you even know what the VIX is? All right, you gotta dig in. Y'all gotta commit to this, man. That's probably the biggest problem. It's too many people are doing this, dabbling, not committed. When I got started in 2008, I knew I would be doing this for the rest of my life. Now, I didn't know I was going to be teaching. That kind of came. That was like God saying, yeah, I know you think this is all about you and making money, my guy, but no, I want to use you to help some people. I was like, okay, all right, okay. Luckily, I love teaching, right? My mom was a teacher, right? So it kind of flows naturally. But anyway, backtesting. It's the general method for seeing how well a strategy or a model would have done after the fact. How well a strategy or model. So it's a method. We're trying to figure out, does this strategy work? Does this model work? What does that mean? So if you take my class, you still should backtest my strategy. Even though you're paying, all right, you're paying premium money to get literally to learn from one of the best educators in the country, probably the world. But I truly have a system with all the bells, the whistles. There's a philosophy to it. Everything's figured out. I've gone through all the pain, All the stuff people ask, oh, where should I get in? Where should I get out? How do I stay in the trade long? Like all of those questions everybody struggles with. A system should answer. But you don't trust it just because you paid for a class or you saw some YouTube video. No, I don't trust anything anybody says. And I don't have to, because if you tell me that, these two moving averages or this Fibonacci level or when VWAP does this or whatever indicator, whatever little recipe somebody claims to have, I don't believe you. I want to. I'm just going to backtest it. I can find out myself if it works. I can find out if there's really clarity here. A lot of stuff sounds real good and clean and easy. And as soon as you go do it by yourself without that video playing, without the trader walking through perfect examples, right? Because right? People don't often want to let you know that, yeah, it looks simple, but it's more complicated than that, right? You got to test it for yourself. And when that person's not there in your ear or that, you don't have them, whoever that them is that maybe you learned from or that group or that Discord or whatever, then you're like, uh-oh, wait a minute. I thought this was, oh, wait a minute. I'm confused. Wait a minute. It's the indicator, well, wait a minute. Bollinger Bands are moving averages move. Everything moves damn near. Almost everything is different live. It's different when it's live and it's real. And that pressure's there and you have to make a decision. It's totally different ballgame. So backtesting is really key. Because you don't even know if you should take a trade if you haven't backtested. And think about it like this for a second. It's no different than you're a professional NBA player. I'm gonna use sports and science for a second because this is like a scientific method of approaching this, right? Imagine your favorite team. Let's say it's LeBron and Bronny. All right, you love the Lakers. You think they're going to put some new play, some new method for achieving a certain goal into the game? 10 seconds left. You think they're going to run a play that they've never practiced? They've never tested over and over and over in a scrimmage. They're not. That's not what professionals do, right? So even with sports, very simple metaphor, that play is going to be tested inside and out. Why? So everybody on the team can be super familiar with the ins and outs, what may happen by running the scenario over and over and over and over, right? Practical. Think about science, right? Scientific method. We observe a pattern. Maybe this is a strategy. Let me put some rules to it. Now let me test this thing. Let me actually test it. All right. We didn't just come up with a what do you call it? A COVID vaccine. They didn't make that vaccine in 10 minutes. That vaccine took a second. And if we really and I'm not like a science guy for real, so I don't have a ton of metaphors, but just using COVID. Or the creation of vaccines. It takes time. Why? Because we got to test different iterations. And then we have to actually have some statistical data to say that this has a high probability of working. If it doesn't have a high probability of working, why are we using it? Doesn't make sense, right? So, okay. Enough of the build up. I'll keep that really simple. So that's what backtesting is. A couple quick points before I show you. We just going to jump on Apple. Backtesting assesses the viability of a trading strategy. The viability. Assesses, right? You're doing assessment as a trader. The underlying theory is that any strategy that worked well in the past is likely to work well in the future, and conversely, any strategy that performed bad in the past probably won't work well in the future, right? So this is the lens. Even when you pay for a course or you see somebody who's some guru who everybody loves, some new methodology, back test it. Don't spend a penny trading something that you don't even know works, right? And the last thing, when testing an idea on historical data, it is beneficial to reserve a time period of historical data for testing purposes. If it is successful, blah, blah, blah. If it's successful, we can go back and look at enough time. It gives us some data. So we're gonna jump in. Just gonna dive right in. Matter of fact, let me see this though. Where you guys at? Okay, I'm just checking my list. Annette, what's up, Annette? She said, let's go, Noble. What's up, Annette? How you doing? Glad to have you. Edward Boyer said, one of the first things I learned in graduate school is you have to define terms so that your audience will know the definition of the term you're operating under. Edward, Ed, you know what I say, man. I create education for educated people. I know that might sound a little elitist, but I do. All right. I love learning. I love learning. I'll never stop. I hope my brain never slows down. I really do. It's one of my biggest fears about aging. Your brain starts slowing down. I want to keep mine as sharp as possible. It's my weapon. It's what's gotten me through life. Right. And yes, to define the term, that's one-on-one education stuff. What are we even talking about? How are we talking about backtesting without defining it? Okay, so we know what we want to do. We want to backtest Apple. Now, we need a strategy. So if I tried to explain what I teach my students, I would not do you guys justice in trying to explain it in 30 seconds when it literally takes me 4 weeks and truly is about 90 hours of content in my courses. My futures and options course, both about roughly about 90 hours of training. All right, so I won't do that today, but I will create something. We'll keep it simple. So let me start here, and I'll make this. Let me take everything off so I can start from scratch for you guys. Okay, so let's do this. We need a strategy first. So I can't even backtest until I have a strategy. And we're going to keep it simple, but a strategy needs some rules and criteria. Right? A strategy is, again, it's like a play in a game. Every time you watching the MBA or NFL just started college football. Well, college football just started. The NFL start? I don't even know. I know college football started because I watched a few games. All right. I saw Colorado win their first game. A game is nothing more than a series of strategies, defensive and offensive. Couple audibles if you need to switch it up. All right. It's when you watching sports, man, you're watching something so beautiful. If you think in terms of like strategy, you like strategy, you one of those people like me, you kind of nerd out on strategy and good implementation of something designed to work against the challenge. Trading is sports to me. It's all the same. There's a goal, there's a strategy, we got a back test. So, okay. This is Apple on the week chart. Apple on the week chart. And what I want to do, I'm literally coming up with this on the fly. I am going to, my chart looks a little bit different now. I'll explain the indicators for you real quick. I've been using these. This is kind of like my base core setting. So what you have on this chart, the yellow line, 20 period simple moving average, is the average. It's like half court. Above it is bullish, below is bearish. Keep it real simple. All right. If you're under the average in a class, you're not doing well if you're under the average. Even if the average is a B, you're still under the average. So yeah, you might just be a little bit under at a C, but you never want to be under the average, right? That's bearish. Above the average, bullish. Keep it real simple. The top line, the top band, and the bottom band, these are what Noble Woods loves. Core kind of piece where I bring in statistics, matching it up with the definition of volatility, which I won't read to you guys right now, but this is the one. These bands, I call it the one. I know it's two, so it's like how you got a singular word for something that's two. Don't worry about that. It's the one. This is +1 and -1 standard deviation. You're seeing statistics being applied to the chart, to price. All right. It's did I say it was Bollinger Bands? Yes, Bollinger Bands. +1, -1. Top is +1, bottom's -1. That enters us into a whole realm of thought, right? I don't trade based on I'm using statistics, something that is literally a field of study that has reason and it's proven and it works and we use it in everything. There's no business in the country that doesn't use statistics to analyze data. That's what this is. You're analyzing data. All right. Okay. So let's go here. I'll put a line here. These blue candles are a indicator called the TTM trend. actually is using it's kind of basic math. It's going back calculating. It will color the bar based on if price closing in the last, I forget the number of bars, but the last some set number of bars is above the 50% or below the average. So that concept of being away, under, above averages, as soon as you start talking about the mean, the average, we're talking about stats. We're having a conversation in stats. Stats 101. There's nobody who's ever taken a stats class who did not learn what mean, median, and mode meant and what standard deviations are. It's basics. But that's what this is, right? So this first week was 429. So what I want to do is I'm just going back. I'm analyzing how many weeks is this. I'm using Thinkorswim for those of y'all who are wondering. This is 18 bars, so that's 18 weeks. All right, 18 weeks. And so here's what I'm going to do. I want to analyze a strategy that does this. I put some rules up here. I'm looking at when the TTM squeeze turned blue. When it turned blue, this indicator is telling me something. Now, there's more to it. There's some pros and cons, right? I'll do some more videos on this one specifically later in the year. I got some super dope stuff coming, but for now, we're going to keep it real simple. If the candle's blue, it's bullish. We want to go long, all right? So I'm using the week. If the week is bullish, and we're going backwards, yes, but that's what back testing is. We got to go backwards. But I want to look at the week chart. So I'm going to draw out a few things, right? I want to go to the week chart. And then I'm putting week chart trend. All right, so I'm actually getting my trend, getting the direction from the week chart. Let's add some more. What else do I want to do? I want to see, I got to calculate something, so I'm going to put a question mark there. I know what I need to kind of calculate. I also want to, this is slightly advanced, but it's not complex, but it is advanced. I don't think most traders do it or learn to do it until there's some years in. So I'm going to give you a little bit of advanced, just right for a second to make it, kind of add to it. I'm actually going to use a combination of the week chart and the 4-hour. So I want to get my trend from a bigger time frame, the week. And on the 4-hour, I want to get my actual entry. Why would you do that, Noble? Why would you look at a bigger time frame to get the trend direction, but enter on a smaller time frame? Because if we know the week is bullish, then every time the 30-minute or the 4-hour or the daily, anytime we go down, we have to go down, but we're coming back into the main direction. All right. So imagine we're on the 4-hour and we're pushing down, but the larger trend is bullish. That usually is just where we're going to make a bottom. We're going to make a quick low, a swing low, and then we're going to go back into the main trend direction, even on a smaller time frame. So you're not going to see the week turn bearish and then flip back bullish, but you will see those smaller time frames turn bearish and then return back bullish. When we're hitting new highs, everything is hitting new highs. It means everything's in alignment. The 4-hour is bullish. The daily's bullish. The 30 minutes bullish. Just think about a crazy strong bullish day. Every chart is bullish. The 5-minute is bullish, the 30 is bullish, the 4-hour is bullish, the day is bullish, the week is bullish. When we're hitting brand new highs, like we just hit a brand new high today, every time frame is aligned. So all this multiple time frame is can you understand when the 4-hour is bearish, but the day chart is bullish? What does that mean? Which one do you take? If the week chart is bullish, but the 4-hour is pushing down, it's like, wait a minute, Noble, I'm getting confused. Don't be confused. There's only one real thing happening. All the different time frames just give you different slices of the same picture. And you don't have to use multiple time frames, but I just want to show you because it's fun for me to show y'all these multiple time frames. Because a lot of people don't really teach it well. Actually, I don't think anybody teaches it well. I hate to say that, but y'all know I'm critical. Okay, so we're going to look at the week chart for direction. We're going to enter off the 4-hour, smaller time frame. Okay, we need some more criteria, though. That doesn't tell me anything. What the hell am I entering from? Like, how do I know where to get in? I don't know. Let's make it up. And this is literally how I used to years ago testing. I can't tell you guys how many strategies I've back tested. If you give me a new idea, let's say some new indicator came out that I just really liked from even just what it does. It mentions statistics or standard deviation, right? It just kind of speaks to me, and I'm like, oh, I need to test this. I will literally spend 8 hours on charts on a Saturday and then do it again on Saturday. Like, I don't think most of you guys really know what real traders are doing. Like, we're not putting this stuff. It took thousands of hours to get here. Right? Thousands of hours. But backtesting itself is not, you can't backtest something in a couple hours. You just can't. I'll backtest for weekends on end, weeks, just testing, going back over it, testing different parameters. So let's do this. So we're starting to form a strategy. And again, I'm just making this up on the spot. Now, luckily, I'm an expert at my craft, so I can make up 5 different strategies right now on the spot. And they all would make sense, but they're not exactly what I use and teach because it's layered, right? So I can't do all of that, but I'm just making up something so it'll make sense. So we're looking at a bigger time frame. These bullish candles on Apple on the week. Our entry is going to be the 4 hour, but where do we get in? So let's do this. Let's have some fun. Let's go to the 4 hour. All right, let me take these 200s off. Let me take those off. Okay. So this is what we're actually looking at. Way more candles on a 4 hour, more fakes, a lot more stuff happening. Just a lot more stuff is happening here. All right. Let's say, because we need some sort of rule. There's a couple different ways I could do this. Let me actually give you guys 2 different ways real quick. I'll give you a super basic rule, and then I'll give you something slightly more advanced. The super basic rule, let's say I'm gonna go back to the day real quick. To the weekly. And let's say for whatever reason, you've just been paying attention. This is observation, scientific method. We usually observe something. We build a hypothesis. There's a theory. Put together that theory, then you test it. You tested a good theory should work for predictive, right? It should give you a certain level of predictability. And that's all a theory is. Does it make enough sense? Is it kind of like, is it good enough to where we can use it to predict behaviors, sales, anything? Right? It's just theories. Right. I'll use my box. I use boxes a lot. I would encourage you guys to really, well, actually, you'll just see what I do because I can't even tell you what to do. You'll see me do it. So I'll kind of zoom in here. Now think about this. Every week this week we push down first, and then we pushed up at some point in the week. This week here, long wick, we push down and then we flip back up bullish. All right, this week, no wick. We just pushed straight up from Monday. Never really went below the open. These 2 bars never pushed up from the open. Never went $1 higher than the open. This bar, the same thing, down. Right, so if you think about how prices move, all we're doing is going up and down, up and down. But is the overall picture trending up or trending down? Even though the market is bullish during this entire period, you still have little pullbacks. You got pullbacks on the 30-minute, the 4 hour, the 1 hour, the 2, right? You got pullbacks. Nothing goes straight up. All right, so we're kind of digging into, we're using a larger time frame. We're digging into this to find an entry. Let's just say, and this is something I used to do, and I'm telling y'all, like, I've had strategies that are like super smart and stuff that's like just simple dumb that a kid could come up with. And I've just over time optimized. That's the name of the game, right? So a younger Noble would have been like, how long are these wicks? Maybe the wick, let's just say this wick here was 196 down to 191, $5. This wick here was 173 down to 168, 169. What is that? Oh, that's about $5 too. About $4. This wick here was 199 down to 196, $4. So I just looked at the candles with the clearest push down first, push back up during that week. I know something. I know the 4 hours pushing down when we're making those wicks before we go back up, right? But I need a number. I need something to kind of help me to get in. So let's just say we're using those 3. That's as much as I knew to do. And I'm like, well, it looks like most of the weekly candles before we really take off, we get a nice 4 or 5 point pullback. Okay. So what I'll do is I'll make a box. That's basically about $5. So 205, and I made this 200. So this box represents 5 points. Now we have something we can work with. We got a theory. We got something we've observed. I don't know if it, right? We don't know. We don't know if this works outside of this little period. But that's the whole point, right? If I taught you this in class and said, hey, I use a 5-point entry, right? And so anytime we have a week that opens and drops Apple $5, we're below the open. If we push back up, we reverse back up $5, just get in. It's going to take off. It's going to at least go $5, right? We're talking about options traders. Then that's like the basic parameters. So week chart, we're using the 4 hour for the entry. We know we're going to wait, all right, for this $5 pullback. Just means we're going to wait for these pushes down. Basic strategy. Oh, where's the target? Oh, my target is $5. All right, so we're building a strategy. My target is what? $5 out. $5 above my entry. Where is my entry? The actual entry is, and I'll show it to you, but I want to wait for price to push down $5. And as it comes back up, which allows me to be prepared, that's where I'm going to get in. Where's my stop loss? Let's keep it simple. My stop loss is under my $5 trigger, and I'll put trigger box. I know you're gonna be like, what the heck is a trigger box? I'll show you. So this box here is my is what I'm using to kind of help me to see what I need to see. And think about it. This strategy isn't really based on stats. It's not really based on anything sophisticated. It's literally just based on observation. It looks like every time we drop about $5, we go up. I knew the week chart was bullish, so I'm leaning with the direction. There's some logic there. I'm trying to get some precision. I don't want to like risk $20 on Apple. But how much do I need to risk just to catch these moves right when they dip a little bit, turn around and go right back up, knowing the direction is bullish? All right. So what I'll do now is, now that I got that, I will go to the 4 hour. 4 hour. And what I'll do is, it's kind of like backtesting, is if this was the, oh, no, wait, hold on. I got to do it differently. Hold on. I got to change one thing. Okay, so this was that first week that was blue. So I actually got to move this line to after, right? So again, I'm keeping it super simple. The TTM trend turned blue is telling me, hey, we're getting ready to go bullish. Now there's a little rule that says you want to wait for 3 candles. I got some videos coming on that. That's kind of true, but it's not like, I've learned the pattern for when that TTM trend doesn't work. So it says a rule of 3. It's not really a rule of 3. Right. I've lost money on that rule of 3, which is why I refined. It's not a rule of 3. It's not what I use. It's not what I teach my students. All right. So let's do this. I'll use that rule of 3 though. First 3 bars. The way that this indicator works, if you look it up, TTM trend, the basic instruction is going to say when you get 3 bars, the trend direction is now that direction. So when we were here and we got 1, 2, 3, right? If you use the TTM trend, it's telling you basically all this green is a downtrend. Now that we have 3 blue bars, we're bullish. But again, it's not really using sophisticated math. It's just saying, hey, the last X amount of bars are either above the average or below. So it's a little it's pulling in something that's helpful, right? But there's no standard deviations. There's no real statistics in the math for this strategy. Y'all see what I'm saying? Like sometimes people are trading and you don't even know, like, is your strategy remotely sophisticated? Just in the sense of what is the math that you're using based on? What I'm doing now, this is real basic. It's literally, I'm just looking at these bars saying, look, it looks like every time we drop $5, we go back up. Can I make a strategy off of this? I don't know. We'll see. Does it work? We'll see. So what I want to do is I want to go here to where we actually have those 3 bars, because if we were doing this real time, and you got to, here's the problem too with back testing. A lot of you guys don't, you got to think it through and literally go backwards and then go forward, right? So you're not, you need to take the strategy, the model you're testing, go backwards, not know what's coming, decide on a certain time frame or reason to start the testing, right? So this starts the testing because a key part of this strategy is I need the week chart to be bullish. I'm using a simple, just the TCM trend to tell me it's above the average. We're above the 20 on the week. I got those first 3 bars. This indicator says it's bullish. Let's test it out, right? My entry is simply a 5-point pullback. All right, so it works just like this. If this was real, I don't know what's coming. You don't know what's coming here. But you need this 5-point pullback. You need it to pull back 5 points. All right, let me move this over so I can, it doesn't need to be that long. All right, so 180. So 185. How long have I been on here? I don't even know. Wait, let me look real quick, y'all. I can't even tell. Whatever. Oh, 243. Okay. All right. So this is my box. It helps me to see my entry. Matter of fact, I could take, let's take Bollinger Bands off. I don't even need that. All we're looking for is we need a drop of $5. We know that the week is bullish. All right. So right here, this lowest bar. All right, now that we can actually start. This is the lowest bar right there. So I'm putting this 5-point box at the low. This might be it. We might take off from here. I don't know. And then we slowly go across. Did this ever get us in? Did we ever get up here to 193? No. Nope. Oh, look at that. As soon as we start going lower, now we adjust our box. We want price to go lower because we're buying bullishly. Bullish. This was the low. So the day before, at the end of the day, you already know what your entry is. If we break 191.62, that's your entry. Based on this system, that's the entry. All right, did it get us in? Now this is tricky, right? Because we're looking at the pre and post. I mean, we're looking at intraday, right? So the 2 bars inside the black area is intraday. After hours, right? Earnings, right? People who can invest and make this, right? Money's moving still, right? So you'll wake up, apples at a different price, right? You can't buy it like 3 in the morning, right? Right. So that's the tough part about back testing too. This way. So how do you deal with that? Right? I don't know, Noble. How do we deal with it? I don't know. Think. It's back testing a strategy. So you didn't get in at 1 in the morning because you couldn't get in and you weren't up at 1 in the morning, but that was your entry. So when it came back to it, do you buy? It did come right back down to where we wanted to get in based on this. So yeah, let's say we bought let's say we bought right there. All right. I'll put a small line. So that was our entry. Did we lose our stop? Where's my stop? My stop is under this bar. Keep it real simple. It's under the bar. Are we going to win or lose? I don't know. Well, what's my target? Oh, wait. Hold on, Noble. You said the target was what? Target was 5 points. I mean, $5. All right. So where's my target? You just copy that box. My target's up here. So we got in at 190, 150, 196.50. Real simple. Did we get there? Did it win or lose? I don't know. We'll see. I know if I'm thinking about options, yes, we got to figure out time. Let's just say you gave it 2 weeks. All right. I don't know. We'll come back. We'll figure that out later. Did this get there? Yes, it did. And it took, our entry was this day. So that was 1, 2, 3, 4, 5, 6. It took 7 days. You know what Noble would do as he's backtesting this strategy? I'm going to capture that. It took 7 days. All right, it took 7 days. I'm gonna put a little circle over the bar where we basically got to where my my 5-point trade would have panned out. So that's it. That's the first trade. Win. Okay, cool. Where's the next one? Actually, let me make this a dotted line. Make this a dotted line. My stop, I don't even need to really worry about. I just showed you guys the stop just so you would kind of know what I'm doing. I'll leave that box on, and then we'll go to the next trade. Where's the next trade, Noble? After another 5-point pullback. It's still bullish. I just wanted to drop 5 points again, $5, and go back up. Right? That's how basic this strategy is. So I'm here. All right, so now this was the new low. Oh, nope, this was the new low. So again, did it ever get us in? Nope. Did not get us in, went lower here. All right, so before this 4-hour bar opened, let me kind of zoom in on that a little bit. Before this new bar opened at 9:30, you had to adjust your box and say, oh, we dropped yesterday. So looks like that low was 192, 191. My entry is 196. So you already know before the day starts, if Apple shoots up to 196, that's when you're getting in on this little basic strategy. Did it work? Yeah, popped up real fast. Did it go 5 points? Yes, went 5 points in the same day. All right. So that's like right in there. I put my little box, and then how long did this take? 1 day. Same day. All right, so that's 2 trades. Just using this little fun, quick, easy. So where's the next one? If we're here, then this is the actual pullback right here. We pull back. We're just going to keep taking it. Again, if these are the parameters, these are the rules, it's just like this is one of those strategies that literally is 8th graders could have came up with this. This isn't like sophisticated, and it might be to some people, but it's really not, right? So where's the next entry? The next entry was here at 207 or 208. All right, so I'll make another little small line. My entry was there. And did that go up another $5? Yeah, it did. So that was $5. And that was right there. And it also only took a day. So that's 3 trades. This candle's a little funky. I probably pushed up first because we were just in such a strong uptrend. So I'll just kind of reset it here. I don't know what's coming the next day. Maybe we go lower, maybe we go higher. I don't know. But I already know my entry's 217.5. Didn't get me there. Adjust my box just a little bit. Did it get me in the next day? Nope. Start to go lower. I adjust my box. Where's my entry? I'm waiting on 216.4. $216.40. That's what I'm waiting on. Did it get me in? Yeah, it got me in there. Right there, it got me in. And did it go another $5 my direction? Nope. Lost. How do I know it lost? Because it went under the box. So what Noble does is I'll leave that box, this ugly pink salmon color, because it tells me that was a loss. All right. If I go here, this is my next low. I don't know what's going to happen the next morning. I know my entry is 13.65. Looks like it went lower here. It probably pushed down first during the day and then pushed up. So let's just say our entry is here. I can't perfectly see which direction it went first, but I'm assuming it's probably that pump fake at the beginning of the morning. Push down for about a good hour, 10:30 reversal, flip back up. So it got us in at 211.5, but did it get us back up here? Yes, it did. All right. It got us back there on this day. Really big day. And so how many days was that? That was about, entry was here. So that was 1, 2, 3, 4, 5. Got really close. 5. This would have scared most of y'all. You probably would have took profit because we were so close. But if we're just super disciplined, you're waiting for it to hit that mark. Boop. That was day 6. All right, so 6 days. Okay, I'm gonna stop here because I think you get what I'm doing. If I were to continue, let me see. Oh, that's a lot. It's a lot. It's a lot of moving. Okay, so let me just see if I can mark these off. So there was another trade that would have won. That went 5 points. Here was another pullback. That went 5 points, so that was another win. And then we had this $5 pullback. That went up another 5 points from there, so that was a win. We came down 5 there. Almost got me in. Nope. Dropped here. That was a loss. All right. And dang, I almost got to go all the way across just to actually calculate the numbers. But so let me just pause with me for a second while I just go across. So that one lost. This one went a little bit lower. That would have got you in. That one did go up 5 points. Cool. And then it dropped. What? Dropped there? Yeah. Next morning, popped back up. So that would have made 5. What is this? Earnings? Yeah, earnings or something dropped us. So we dropped down here, got a bottom, pushed up. Did we go $5 off of that bottom? Yes. Sheesh. Okay, I'll go all the way across. I'll go all the way across just to finish it out. So we made our 5 points that day. The next day we got a really strong pullback. Y'all see that? This day, real strong pullback, push back up $5. Next day we were up another 5. So that trade won. This was the new low here. Would have got us in there. Did it go 5? It did. And then after that day, this was, I guess, the strongest pullback was right here. So then we would have got in right there. Did that day give us $5 move? Yep. And so then this would be my new low. Did that go $5 and ever get us in? Yes, it did. It got us in way up here. If you had an alert set, it would have hit your alert. Boop. So that was here. Did it ever go under this bar? No. Let me see. And did it get back up $5? Yeah. Look at that. Almost perfectly. All right, so I'll take this box off. So, using this, just made up on the spot type of strategy, does it work? Does it win more than it loses? If you could execute it perfectly, if these were the basic rules, I'm just waiting for the week chart to turn bullish. And every time Apple drops $5, I am going to wait on it to reverse back up $5. Right? A lot of thinking went into this. Well, I'll take that back. I didn't really do like a lot of analysis to come up with the hypothesis. The hypothesis is, I think when Apple's bullish, it's only going to pull back $5-6 and keep going. Based on what? I looked at the chart for the last 18 weeks and that's all I saw. Now, is that enough time to gauge it, to make this a strategy that I'm going to use for the next 2 years? What was happening in the last 18 weeks? All right, so let me go back here for a second. So we talked about what backtesting is, a methodology to go back and assess a model of strategy. Does it work? NBA players use this scientific method. Every scientist uses it. It's how we came up with vaccines. It's how we make anything better before putting it in a real live environment, which usually means before we start spending money or losing money, we need to test it and make sure it works. That's all this is. But you need some rules and criteria, and they have to be so specific that I could literally give this to somebody else and you could back test it and we should have the same results. If the strategy is so weird that it's like, oh, and don't get me wrong, there is these are called discretionary strategies where like it's just very precise. There's specific rules. Now, I'll be very honest. I'll be super honest. Even what I teach my students, because I want them to really to focus on mastery, you're going to get to a place where there's just different nuances. So I will see a trade with my system. It doesn't mean I have to take it though. Right. So for me, there's a core criteria that I use to help my students identify the trigger candle. But then you got to apply a little bit more assessment to say, okay, this is the bar, but is the market giving me all the parameters really around volatility that I can trust to take this high probability setup? So I got like a double layer. It's a check on a check. There's like some questions and a system under the system. So there's a technical piece, and then there's a piece that really drills in a little bit more, right? But if we're looking back here, right, at all these boxes that I drew, based on just, right, these last 18 weeks of this, how many won? What percent, right? How many won, how many lost? It's real easy to see. You just count up the boxes. 2 losses, the big pink ones. Got me in, came right back down. Take it again. Still bullish. Volatility's still there based on like assuming it's still there, right? Based on this strategy. That's what you would have to assume. If you lose and it goes lower, great. Take it again. As long as that week chart is still giving you what we want. Right? The wins 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. No, wait, hold on. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Okay. Because that was that last entry. So 14. So we had 16 trades and 2 losses. 2 divided by 16 is 12.5 minus 1. That's an 87.5% win rate. 87.5%. But is this a strategy that Noble uses? Nope. Doesn't take enough into account. It's pretty rudimentary, right? I'm just looking at if the market drops, if Apple drops 5 points, it looks like it goes back up 5. It works a lot. There's a lot of stuff that works, y'all. But what is this based on? Like, what is this grounded in? What's the philosophy here? It's really not a philosophy. I look back at the last 18 weeks, which were coming out of the VIX, dropping down to VIX going as high as 65. That's super rare. So this entire move up already, it's abnormal because it happened after something that happened that rarely ever happens. Last time the VIX hit 65 was COVID. So this as a strategy already is flawed. It's already flawed. All right. And if you're not paying attention to, let me show you this on my notes. If you're not paying attention to, notice how I say details matter? Yeah, I can walk around saying, oh man, I just invented a strategy live that makes a 87.5% win rate. Just keep using it. It's going to keep winning. Why did it work? Do I have anything in here talking to me about volatility? Were these high probability setups? Why? Was my stop loss being under that low? Does that make the most sense? Yeah, those lows are supports. I'm putting my stop under support. Yes. Maybe it should have been $1 under support. Maybe it shouldn't have been right there. Why did I use $5? Maybe I should have used 7. Maybe I would have cut out some of those losses. Maybe I could have went for a bigger percentage, right? So now, if I'm actually backtesting this, it's like, this is cool. Yeah, it's something here. But I got to think about what was happening in this specific market environment. right? I got to think about the time. I got to think about, did earnings just come out? Like, what was happening? Was this like normal where I can really kind of replicate? And then I only went back 18 weeks. Shouldn't I be able to do the same thing on the bearish side? Maybe Apple's range over the last 2 months has grown. What about 6 months ago when the range was tighter and it wasn't moving? I would have to adjust that that $5 box. All right. So things change. Things change. If I'm here and I think this is making sense, and I was doing this like for real, then what I would do is I would like take notes, capture all of this. Okay, 5 points. Then I'm going to start testing other different parameters. So maybe now instead of testing a 5-point box for an entry off of a reversal, off of a bottom, what I assume is going to be a bottom, a swing low in this pattern of uptrend based on the week. Now I'm going to maybe test the $6 box and then do all of that calculation. What's the win ratio? And then maybe I'll calculate a $7 box. What's the win ratio? Maybe I don't even want to trade that much. Let me use a $10 box. I don't know. Maybe it's better. Maybe it's less trades with a bigger payout because I'm holding it for $10. Right? You could take 2 trades and make $5 in a move, or you could take one for $10. Maybe. I don't know. Should you? I don't know. We got to test it. That's the whole point. That's the whole point. So let me do this. Let me check this real quick. For those of you who are watching, Dr. Felicia Sumner said, nice. That's what I'm finally figuring out, even with my day trades. Cool. I don't know what you figured out because I was, y'all know I'll just be talking, teaching. Right. So I don't know what you were commenting on, but I'm glad. Whatever. Hopefully this was helpful to you guys. I will really quick, if you're on watching live, if you got any questions, feel free to type them in the chat real quick. Until then, I'm going to just for 2 seconds, again, the Noble Woods brand, man, I'm really trying to add my voice, my insight, my God-given love for analyzing to YouTube, to the world. I've been doing this 30,000 hours. It's been 30,000 hours. 2008. Started with futures. I love futures. I don't trade futures every day, but I there's not a day that goes by that I don't. Right. I usually take Wednesdays off. Why? I just like the break in the middle of the week. Plus Wednesdays. Even think about that for a second. Why do I take Wednesdays off? Because Wednesday for Noble is the day traditionally where I don't make any money or as much. For whatever reason, Monday, Tuesday, beginning of the week, we just have more aggressive buying. Wednesday's like the lull day to me. So based on my own statistics, my own data, my own experiences, I don't really care about Wednesdays as a day trader. Historically, they haven't benefited me. So I just take Wednesdays off. It's like a weekend in the middle of the week. And then I just come back for Thursday and Friday, right? So, and even that makes trading a bit psychologically a little different. I only need to be focused for 2 days and then I got a break. It's tough to focus for 5 straight days. All right. So I'm just trying to help you guys. I know what I'm doing. I'm one of the best out. If I hate to say this, no, I take that back. It's not that I hate to say it. I just don't want to because we got enough people who are gurus and experts in this space who kind of lead with pride and arrogance, and that's not right. That's not me. That's not my thing. Plus, it's hard to be that with the name Noble. Right? I think God was like, yeah, let me humble you before I even make you. Right? Let's give you a name that kind of means you should have some moral character. Right? You shouldn't be like the arrogant guy on YouTube. Right? So I love what I do. I know my method is undeniably superior to all the methodologies that I've seen over 16 years. And it took me from day one. I use Bollinger Bands from day one. I've literally been refining from day one. I can almost walk y'all back through every strategy I've had. And some of the elements of what I did today literally are based on things I used to do. It's kind of why I could just make it up on the spot. Right? So you're in good hands. Please come back 2025 and the rest of this year is about to get real fun. Oh, I got some stuff that's coming. I want to challenge what you know. I want to reposition you. I want to give you new definitions. I want to tell you why certain indicators don't work. I want to get into the psychology of every piece of trading. 2025 is going to be a really great year. I need your support. I need your help. Right? I do, because I'll say this and I'm going to go. As a community, this space blew up. The Black financial expert space kind of blew up in 2020. I was teaching back in 2014. I actually started in 08, really 09. Right? So for me, this is like beloved territory. People walking into, I know what you're looking for. You're looking for freedom. You're looking for change. You're looking for, it's not even all about the money. It's what the money can provide. I know. And again, I fully committed from day one. Now, I'll be real with y'all. I was making six figures working at Bank of America. I just got my MBA. So it was the perfect time for me to invest seriously. But it's been an amazing journey. And I just want to help more of us, all people, but specifically people who look like me, because the history of this country has not been nice to us. And this, I just looked at some wealth statistics the other day. Wealth gap is pretty big. It's pretty big. And over the last 20 years, if you look at African Americans, if you look at Black folks in this country and what our wealth is based on, a very small percentage of it is stocks. You look at our white counterparts. Matter of fact, let me pull up the numbers real quick. I'm that guy. Yeah, I got some numbers. I got some data for you. This is from Brookings, the Brookings Institute. Growth in Black wealth has been driven by housing values. All right, so when I'm looking at it, right, it's a chart. It's right there. Y'all can't see it perfectly, but oh my goodness, our percentage of Black folks' wealth that is based in equities, corporate equity stocks, it's probably like 7%. White wealth, that's about a good 25-30%. Hispanics, pretty small as well. Other, whatever that other group is, Asian, Pacific Islander, you know how they always have that. Huge percentage, probably like 40. Right, so what am I saying? I don't care who you are. I don't care what color you are. I want to teach you. I want to help you. But I'm very aware. I'm well read. I know the history of the country, and so yeah, there's certain demographic groups that have not had access to wealth building. Right, we know that. So I'm here to do my job. Come back. I'll be live again. Well, I don't know why I decided to do this, but I was like, whatever. Today is one of those days, right? You're gonna be sitting at home chilling. You might as well learn something. What is it? 3? What time did I say I was going live? Hey, hold on. I gotta double check. What did I say? Oh, 2, 5, and 8. There we go. Okay, 2. So you join me for the 2 session, the session at 2, backtesting. I'll come up with another topic. We just gonna dive in. Please feel free to join me. Have some questions. At 5 p.m. I'll be back on my channel live, and then I'll be back again live at 8 o'clock. A lot of me today. I just want to help. Just want to help. If you haven't thought about taking my class, please do yourself a favor. Click on the link. If you're that person who's like, oh no, but I don't know if I can afford it. I'm being so real when I say this. You can't afford not to learn this. You can't afford not to learn how to trade stock options. You can't afford not to. And when we see prices, I don't even want you to think of prices. I want you to think of prices as like the value, the level of commitment. So whenever people lately have been like, oh man, I don't think I can afford it. You can afford it. You just don't value it enough yet. You don't value it enough to figure out how to make it work, knowing what this can do for you financially. I got an MBA. Yeah, I was making 6 figures. Whoop-de-doo. I've learned how to make more money trading than I ever would have made if I just stayed in corporate, hoping to get up to like 200, 200,000 a year, 150, 180. You know what I mean? Like there's so much money and opportunity if you learn this, but you got to commit. You got to fully commit. So if you're not ready, that's cool. Just watch the channel, keep learning, right? I'm not even worried about that. I wanna make you a better trader just from all the free content. Actually, if I really tell y'all the truth, my goal by the end of 2025 is to make my free content better than all the classes you guys have paid for. I know all the names. Oh, I know all the names. I know all the names. And I'm just really confident. I've worked my butt off to get here. I've gone through those scars, right? And I just love helping, man. So thanks for watching. Share this video with somebody that you know and love who needs to think a little bit more about back testing their strategy. Do they have rules? Have they back tested it? Were they sure that it actually works? How far back should you go? How far back would I go if I was really testing this strategy that we just walked through? Would I just do 18 weeks? No. Knowing me, I'm probably going back 90 weeks. Why? Because more data is better. That's where you really will start to see, oh, this kind of worked, but it only worked for a period of time. Then there was a lot of losses. And then you can analyze what changed from these 18 weeks to the prior 18 to 20 weeks where the strategy was losing more, right? Then you can figure out, oh, okay, I see what happened, right? You just got to keep thinking, right? So that's it for me. Thanks for watching. Again, please click the link. Make sure you subscribe to the channel, like this video for you guys who, I guess everybody's watching this on YouTube. That's how the algorithm works. All right. So let's get this out to more people. Thanks for watching. Come back at 5 o'clock. I don't know what I'm teaching on, but it'll be good. It will. Peace.